Hey, Dan Passarelli here. Well, we had a nice little rebound today, didn't we? The S&P 500 was up almost 1% at the close, and it filled a good part of the gap that was left between Monday and Tuesday's low and high, respectively, but didn't quite fill it just yet. But with the strength of this market, you just can't keep a good market down, can you? With the strength of this market, I wouldn't be surprised if we do end up filling it by the end of the week. Again, we don't want to fight the tape, do we? Now, what are traders going to be watching for the rest of this week? Well, we've got the weekly unemployment figures, jobless claims coming out tomorrow morning, and we've got PPI coming out on Friday. Now, look, what's really important here in the market, in my opinion, is PE ratio. Is the market overdone? And we also talked, I believe it was earlier this week, about the kind of disparity where the S&P 500 is up really because of the power of some of these AI stocks. They're carrying all the weight of the market, and a lot of the other stocks are not up. So that being said, what is the market watching, whether they should be or shouldn't be? I think they're going to be watching these two numbers, because if the unemployment figure is significantly out of whack, if there were a lot fewer jobless claims, that would be a sign of a hot economy and would put a little bit of bearish pressure on the market. I don't see that having a huge effect, but we're going to be looking at PPI to see how closely that resembles what happened with CPI. It would take something pretty significantly out of whack there to cause any damage to the market. So that being said, enjoy the rest of your Valentine's Day, and we'll talk tomorrow. Trade smart.